3 ways to get money to charity.
Welcome to Barry's Bites. Please join our host, attorney and financial advisor Chris Barry.
3 ways we can do it via personal check. Maybe you set up a charitable trust. That would be more complicated, or you could do qualified charitable distributions. The best option typically is going to be what's called qualified charitable distributions, QCDs. Because what you're doing is you're taking your required minimum distribution or taking money, even if you don't have RMDs, actually, once you turn 70 and a half, you can do QCDs. We've set this up for clients where they actually have a checking account on their IRA. So that money that you donate to a church or to a charity, instead of it being post-tax money, you're using pre-tax dollars where the government's not getting a cut before you give it to the charity. So I'm a big fan of the qualified charitable distributions. You're using untaxed dollars to go to a charity. Like, that's awesome. That's the best way to do it. If you're writing a check from your own personal checking account, understand that's money that you're already taxed on. It's less efficient, like the government's getting a cut. So if you are 70 and a half and you have charitable interests, I think QCDs are the best way to go. Now, getting into charitable trusts, that's a lot more complicated. And typically, we're really only looking at those if we have estate tax concerns. Other thing to think about with regards to gifting and charities would be what's called donor advised funds. Because right now, with a standard deduction where it's at, a lot of people, depending on how much they give, they're just taking the standard deduction. All those charitable interests, unless it's getting above $25,000 roughly, then you're just taking the standard deduction. So those charitable gifts aren't reducing your tax. With that higher standard deduction, what you could look at doing is what's called a donor advised fund, where you open up a donor advised fund, and in 1 year, you look at what's going to be my gifts I'm going to make over, say, the next 3 years or 5 years. And you make a big gift into that donor advised fund, which will now exceed that standard deduction. Let's say you gift $60,000 in 1 year into that donor advised fund, that's going to lower your income tax. And now instead of taking that standard deduction, you can take that gift. And then over the next 3 or 5 years, you can make the gifts from the donor advised fund to the different charities. And then you can revert back to taking your standard deduction. Again, big fan of qualified charitable distributions. And then also I would look at donor advised funds as a potential strategy if you do have charitable interests.